Guys, welcome to today's session. I apologize for being a few minutes late. I got caught up. I was doing some studying, didn't realize the time. And here we are 5 minutes late. So I apologize for that. Although I never send the link out until I actually go live anyway, just in case that happens. So yeah, we'll give everybody a moment to join. I'm going to try and get comfy today. I've been a bit restless today. I don't know why. Yeah, I don't know. So if I'm sat here moving about, it's just because I'm a little bit all over the shop. How we doing, Rob? Hope you're all good, my friend. Samal, I mean, I'm not even going to attempt to pronounce your name because I don't want to butcher it. But how we doing? I hope you're all good. Rob, we still love you, man. I mean, I hope so. I hope everybody loves me. That's why I jump on and do these live streams every week. I actually realized the other day, I think doing these streams keeps me very grounded because I get to talk to, like, trading is, I always feel like it's a bit of a cliche saying trading is lonely, because I actually don't think it's that different to having a job. Like, yes, in a job you're surrounded by people, but in my last quote unquote job before I started trading, I was the only person in the company who did data analysis and migration. So out of like 200 staff, I was the only person who did my role. To me, that is no different to trading. I'm the only person who's working on what I'm working on. And so I never really found that trading is lonely kind of cliche true. I still to this day don't think it's necessarily true. However, working from this environment where I'm in my house 24/7, that is kind of the lonely bit. So I love jumping on these sessions and just talking rubbish to you guys for an hour or so. Rob, please tell me your thoughts on the drawdown. You seem, I have no idea what that means. You seem MKST active at Darwin staff wise, to be honest. I seem most active at Darwin. Is that what you're saying? What drawdown do you mean? You mean the drawdown that you're going through right now, or something specific? Is it something that you put in the server? Suggestions. Oh no, that was what you added in the suggestions channel, was the option to add a Twitter or social page to our Darwin for investors to see. This has been discussed before. I actually brought it up before to have kind of a face page for your Darwin. The only issue is, from a regulatory perspective, I don't know how much we can put out there, and I know it feels like I always hide behind that as kind of an excuse. We can't do that because of regulations, or we have to consider XYZ. But it's true that, and I guess unless you're exposed to the FCA or any specific regulatory body, you don't know exactly how strict they are. And us putting people's names and pictures on a licensed investment asset that goes through us, I don't know if it would get passed. I don't know if we could do that. Potentially we can. I just don't know. It would take a lot of planning, questions, meetings, and stuff to kind of get an answer. Okay, SPWL. Yeah, so this is extremely frustrating for me for one of two reasons, right? So this is Rob's record. Rob is asking about the drawdown he's been on yesterday, okay, which is just kind of like fell off a cliff here. If I remember right, it was about 5% on the day. So from 33% down to 25.5. So yeah, it's about, I think it was just over 5% drawdown on that specific day. Now, the reason why this is so frustrating for me, Rob, and you know me, Rob, I'll be brutally honest with you the whole time, as I always am when we speak privately. But this really peed me off yesterday for, again, two reasons. Number one, right, you have worked so hard over the past year. Mohit, crypto payment is allowed. We don't allow for crypto payments, again, due to regulatory reasons. Getting it set up with the bank has just been ridiculously hard. It is something that we're looking to add in the future, however, potentially next year. Probably only for Darwinex Zero and not for Darwinex. So the first reason this is so frustrating to me is because you've worked so hard. I've known you for, I don't know, over 2 years now, perhaps. And I've seen the progress that you've been on. You've been around with Darwinex for a long, long time. And like I say, I feel like I've been on that journey with you, and you finally got to the point where you should have been, and the point that you've been working at so hard for so long, and you've for one reason or another let it fall off a cliff. Now, it makes no difference to me, right? It makes no difference to my bank account, my daily life. Like it makes no difference to me, but I still feel disappointed because I know how much work you've put in. Okay, which is number one. The second thing is, personally, I don't believe that it was a friend who traded this account. However, that's not me calling you a liar. I just think it's a convenient excuse. But regardless of that, if it was a friend who traded it, then you should have more respect for yourself and not leave your accounts around a friend, or not let your friend come in and trade your accounts. Like, you have to take the autonomous responsibility of that. You can't pass it off. And if it wasn't a friend, well, you need to take a closer look at yourself, because you've allowed one day to, kind of cast a black shadow or a black cloud above a year's worth of track record, which is not okay. And again, that comes down to you and your responsibility. The reason why it's so frustrating is because Darwinex as a business have invested, I mean, I can't remember the exact figure, but over $200,000 into you as a trader. That's money out of our pocket as a business into you. And whether it was your friend who traded the account and slaughtered it, or whether it was you, it's not okay. Like, this has to be treated with more respect, right? And again, Rob, I love you, but I will be brutally honest with you the whole way. You have something here that there's a lot of traders out there who are grafting really hard to get. You're in DarwinIA Gold. You've got a year-long track record, fantastic performance. You got 300,000 in assets under management. And again, for one reason or another, whether it was a direct result of your trading or letting a friend trade your account, the point is that shouldn't have happened, and you should be treating this with more respect than you have, okay, in the past 24 hours. And that is my brutally honest opinion. I mean, you asked for my opinion, right? And that is where I stand on the situation. This is why I said yesterday that I have no time to sit here and listen about this, because you should be treating this as if it's a business. You should be treating this so serious. If I was an investor and I called you up now, if I was, for example, if I was head of Darwinex Labs, or if I was a private investor who'd allocated capital to you, and I rung you up and you told me, oh, a friend got on my computer and traded it and screwed me over, what do you think my reaction is going to be? Oh, okay, don't worry about it. Let's move on. Of course not. I'm going to be like, well, why are you allowing me to invest into you if you're not going to put the respect in that it deserves? Okay, that's my honest opinion. Of course, I will never hold anything like that against you, but I just think moving forward, use this as a lesson and understand that these things have consequences, and that your track record will show this. This drawdown, it will show this behavior, and that is something that you won't be able to hide from in the future. Every action has a consequence. You've just got to kind of move on with it, and try your best to recover, and hopefully over the a long time horizon, it just becomes a little blimp on the track record, and it becomes history. That is my honest thought process, or my honest thoughts on the whole situation. However, having said all that, I think moving forward, you just need to draw a line under it. You need to, in my opinion, stop trading this year. You've done enough damage this week to spiral any trader, right? So sit back, don't think about it. You're still up, like, fantastic for the year, 25%. Okay, cool. We lock it in. We made a mistake to end the year. Not good. We journal it. We focus on what went wrong, how we can avoid that in future, and then we forget about it. We move on, okay? And we come into 2026 with the same mindset, because if you have the same curve in 2026, let me bring up trusty Epic pen. Where's the pen? Okay, so if you had the same curve in 2021, you're going to look, I mean, 2026, it's going to look something like that, right? So this is going to become less relevant, but because it's the current point in your curve, which every trader has this issue. When you're in the drawdown, it's the current point of your curve. It's more difficult to see forward, okay? But when you're trading up here, you're going to be looking back at this drawdown thinking, oh, well, you know, nothing really happened. There's nothing to worry about. Like it's kind of history. So you have to get to that point. But to get to that point, you need to forget about what's kind of going on currently. I think the best way to do that, and I always say this to people who are going through, you know, a tough period personally or trading, is to just step away. Step away, have a couple of weeks off, refresh your mind, and come back, you know, fresh. Because what I don't want you to do, you've thrown away. You haven't thrown away, but like in theory, you've thrown away all of this. What I don't want you to do is spiral and throw away all of this just because of this period here. Okay. And that can and will happen. Not saying it will definitely happen to you because you can take a step back and whatnot. But Kennedy, yes, this is Darwinex Zero, although it's a stream to both Darwinex and Darwinex Zero. Because both brands are, you know, technically one and of the same. One of the same. That's not the same. However, taking a step back here stops that pretty much guaranteed shift to the downside in momentum here. So that's my personal opinion. I think you're in a like pretty bad situation. I can't lie, because that drawdown's not very nice. However, eyes moving forward, right? Always think about the next step. How do we recover? How do we move forward? How do we forget about what's happened whilst still remembering the lessons that we've learned? Okay. Enough rambling from me about that. Please add soon, because PayPal has too many verification, or add scroll payment method will be okay. Is there any type of max drawdown that we should reach? There's no kind of limit to max drawdown. Of course, there's kind of a mental limit to what an investor would like to see. So if I'm an investor, I kind of know the max risk per se of how or max drawdown that I would be happy with investing into a trader or an asset or whatever it may be. But there's no max drawdown as in where we would go, okay, well, your account's shut off, nothing's ever happening with that anymore. Okay, so yeah. Rob, you're right, man. I should have stayed logged out. Yeah, I did. Okay, screens, red flags. Noticed I'm not the only one too. Yeah, I mean, just use it as a lesson, right? I mean, it's different because like everything that I do is automated anyway. But I run all my stuff on a VPS. So I have everything separate from my local machine. The reason I do that is A, because I want my systems to run 24/7, but B, I have had in the past my daughter access my laptop and close a gold trade. I learned from that very, very fast. And so, you know, quickly moved everything over to a private server that I have to activate and deactivate if I ever want to do any actual trading activity. I think it's so important. Again, you know, we're in this space where trading is so accessible. And I'm kind of going off track a little bit here, but I think it's important. Yeah, it's still a good track record, 100%. It's still a fantastic track record. But we need to make sure it doesn't get any worse from here, which, you know, there's things that we can do for that. You can just step away and kind of recalibrate. But we're in a space where trading is so accessible, okay? It takes 5 minutes to, you know, Google a broker account, open up an account, do your KYC, if it's onshore. If not, it doesn't really matter. And to deposit capital and to pretty much just start trading straight away. I reckon, 2 secs, dog is barking. She's been asleep all afternoon, not barked once. And then as soon as I go on stream, decides to go downstairs and start barking. Yeah, I reckon I could, within 5 or 10 minutes, be trading on a new broker account with capital deposited, right? So I could put my own capital up front and start trading. Now, whilst that's great because it allows anybody to access markets, it allows anybody to become a trader. That's also a double-edged sword, right? It also allows anybody to become a trader. Now, what happens there is I feel like we lose a lot of professionalism because you have a lot of people coming in who are beginners or just basically have no idea of what they're doing. And they open accounts and they start trading and they start losing straight away. And what these people never learn is how to act and be a professional, right? And a professional will always have fail safes in place. They will always have backups in place. They'll use the best software. You can come back here, you. Come back here. You ain't going and disturbing the stream anymore. You know, they will always they will invest as much into their trading or their career as possible, right? Rather than just cheaping out on, you know, a basic laptop or a basic server, basic strategy. Like, they will put in so much work to get the best of the best, right? And it's something that I'm looking to do right now, which is why I'm kind of banging on about it, I guess, is I use FXVM for a VPS, which is a virtual private server, which basically means that I don't have to run my strategies on my PC. Because as you know, if you're an automated trader, if you're running them on your PC, as soon as you close your PC down and shut it down, those trades aren't going to execute, right? The systems aren't going to be active because the MetaTrader terminals have been turned off. Now, if you have a VPS, that means it's running 24/7. So it will still ping even whilst you're asleep or whilst your PC is shut down. Now, I pay about £20 a month for my VPS. It's a super basic one. It's not very powerful. I currently have 4 MetaTrader terminals open on it. Some of them have quite a few strategies open within that single terminal. So the server is quite laggy and it's quite slow. Now, I'm looking to upgrade to a Hetzner server, which I think I spoke about last week. So anybody who was in the session last week will know about this anyway. And it's going to require some upfront investment. Not a lot of money, but more than what I've been paying for the past year. And I'm okay with that because I want the best of the best for myself as a trader, but also for any investors who allocate capital to my systems. Now, I think I've mentioned this before, but I'm in talks with a couple of private funds who are looking to allocate capital directly to me as a trader. Now, what I don't want to do is onboard capital from investors or, you know, have my Darwin scale up ridiculously. And I'm still using the basic budget setup that I've been using for the past 12 months. I have a responsibility to myself, to the companies that I work with, like Darwinex, and to the investors that are trusting me and allocating their capital to me. I have a responsibility to all of those to use the best software within reason. You know, I haven't got to go out and spend 10 grand a month, but if it means increasing your prices from, you know, £50 a month for all your software to 200, 300, 400 pounds a month, but you have the best service, you know, for your strategies to perform at their best or to run the smoothest, then it's a worthy investment because there's more longevity to that. So it was a bit of a kind of rant on about that. But somebody like you, Rob, who is a discretionary trader, you could have the most basic VPS server because you're not going to overload it in the same way that I would. The reason I'm looking for a powerful server with Hetzner is because I want to run strategy quant on there, and probably I would say 6, 7, maybe 8 MetaTrader terminals with, you know, 30 to 40 strategies each. So I need a decent amount of processing power. Anyway, rant over. Conversation done on VPSs and servers. CSM, hello, what's up? How we doing, my friend? Hope you are all good. I want to say at the moment as well, we will be doing a stream tomorrow and Thursday as well, maybe. I'm not sure if my little lad might be at home with me on Thursday because he's now finished nursery for, well, I was going to say for the rest of the year, but he's actually not going back to nursery. He's going to preschool next year. So he might be here on Thursday. I'm not sure. And then on Friday, I'm going to be busy closing down for the week and for the year. So after Wednesday, perhaps there might not be another live session until the new year. I'm trying to think. Let me check my calendar. In fact, I won't check my calendar because I've got private stuff on there. What's the date today? 16th. So we've got the 17th, hopefully the 18th. Friday, I'm going to be busy all day. Then I'm off next week for the whole week because it's Christmas week. I'm also off the following week, Tuesday and Wednesday. And I'll be back in on the 2nd, which will be a Friday of January, which means I think our next session after perhaps Wednesday, maybe Thursday, will be either the 5th of January. We can do a kickoff session, or the 6th of January. Flipping out, it's ages, right? How many days is that? I'm gonna be so rusty when I come back. It's like 3 weeks almost. Damn. I I always get a bit of ring rust when I haven't live streamed in a few days. So after 3 weeks, it's gonna be I'm gonna be crazy bad. Getting ahead with Dr. Ojo. Welcome to the session, dude. Hope you're all good. Always curious to hear your experience with strategy quant, especially the process of finding an edge. Congratulations on your wins. Very inspiring. I appreciate the kind words, dude. I appreciate that massively. So strategy quant is so far I've had a good experience with it. I like the platform. I think it's a very, very steep learning curve that you go through. Although I finally feel like I'm starting to get somewhere with it. Like I finally feel like I'm starting to understand certain things. The the biggest issue I found, or I find, I did set up some custom projects, but I just haven't got round to making sure they're 100% in terms of like their setup and how they work. So I am still doing it manually, but what I want to do when I have my Hetzner server set up is migrate strategy quant over to the Hetzner server, because you can only have your license active on one PC or one IP address. So I'm going to migrate across to there. And at that point, I'm going to set up custom projects to basically run 24/7 without, need for my intervention. It is complex, and it is very it's very intense. So if we go into like the builder settings, there's 1,000,001 different things that you can click. The biggest piece of advice that I can give anybody with this is to just do it and learn whilst you're doing it. So do it not with the idea of getting fantastic strategies and getting them live, but do it with the intention of learning the platform. So try different things, see what works. Right now, I feel like I have a winning formula, quote unquote, for at least for FX. And when I say winning formula, I don't mean like it's producing groundbreaking strategies, but what it is doing is getting me to the point of getting a strategy live. I say live, not on XAQP, but on my second Darwin, which is this one, LVFZ. This is my playground. So this is my testing Darwin. This is where I put systems before they move to XAQP. And what using, where I feel like I'm at now is being able to generate strategies. So as you can see, I've generated 20,000 in the past 3 hours and 30 minutes. Now 99% of these are going to be junk, right? And I'll probably wipe, 16, 17, 18, maybe even 19,000 of them out in the first robustness test that I do. But this is just testing 3 years worth of data for my first sample set. And the reason I do 3 years is because I want long enough to be able to go, okay, well, it's performed a certain way or to a certain level over, a decent time period. It's nothing crazy, but it's 3 years. But what I don't want to do is give it the whole sample set, and then strategy quant will start overfitting all of the strategies for the whole sample period. So what I'm doing is building systems for 3 years. Then I'll test it from 2021 up until 2025, which is a 4-year period, maybe 4.5 years if you consider 2025's data as well, to validate the strategies that it's built from 2017 or 2018 to 2020. Okay, and I do that on Darwinex tick data because it's the most accurate to what I test on MetaTrader. I do also then test it on Dukas copy data as well, just to know that the integrity of the system isn't reliant on specific tick data from Darwinex. Again, 99% of these 20,000 systems are all going to be overfitted. So it's about finding the ones that aren't. Now, once I've built all of these, like I say, it's been running for 3 hours, 30 minutes in the background. 32,000. Strange. I don't know. Those numbers might not be accurate. Anyway, my next job is to strip that down to as minimal amount of systems as possible. So I'll then move them to the retester, which is over here, and start running them on different periods of data. I'll start adjusting the slippage. So if we go into the settings, you can see that I've already got a spread of 3 pips. This is on euro dollar for reference. So I've got a spread of 3 pips. I've got the commissions and the swap fees in there. So it's at least accurate to current market conditions and current fees. And I've also put a slippage of 1 pips. just so that we're getting only the strategies that would survive with a bit of slippage and a bit of spread. My first test to wipe out any system that is that survives. So my first test is the new data. So from 2021 to 2025, then I'll test it on the whole period. But the whole period, generally, you might lose 1 or 2 systems out of the remaining ones, but you'll still have pretty much the same set. I'll then increase the slippage by another 1 or 2 pips, and then I'll increase the spread slightly. So on this, I might increase the spread to 4, maybe 5 pips, and I'll increase the slippage to potentially 2 pips. I'm not too concerned about adding too much into euro dollar because it's fairly liquid, right? And then I'll run the test on that. That always wipes a load of strategies out. Again, systems that are overfit. But as long as I've accounted for spread, for slippage, and for commissions, and it's been robust in different in-sample and out-of-sample periods, I then go on to, changing or doing sequential optimizations, changing small parameters, perhaps running it on different assets, different timeframes, just to make sure that, again, it's not overfitted to one specific asset or to one specific timeframe or one parameter setup. Let's say it's a moving average strategy, and the exact moving average parameter it uses is the 121st day moving average. But if you set it to the 122nd day or the 120th, it blows up. Of course, that is just an overfitted strategy and, isn't going to make the cut. Now, once I've done all these robustness tests, I'll probably break this down from 20,000 to perhaps 4 or 5 strategies when I'm done with it. And your job here really is to just break the systems. It's not to find a good system. It's to invalidate as many of these as possible, which is really, really important. Okay, you're not chasing the golden nugget. You're trying to break all of the systems. So if I'm left with 4 or 5, what I'll do is I'll look at the curves. I'll look at all the information on the systems. Again, I might do some more stress testing on those specific strategies. But at that point, usually what I do is save all the information. So I'll save the SQX files so that I can re-import them at a later date if I need to. But generally what I do is extract all the source codes and then start testing them in MetaTrader. There's usually a bit of a difference on the testing that you get in MetaTrader to SQX, but if it holds up to my sort of metrics that I look for when I'm looking for my Sharpe ratios, my CAGRs, my profit factors, recovery rates, max drawdowns, returns, I have kind of a criteria list of different metrics that need to meet minimum benchmarks. And if it passes all of those, I then move the strategies over to LVFZ for testing. So if I just I'll load up my VPS. There's XAQP, and this is LVFZ. So it's very, very yen pair heavy at the minute. In a GU trade, which one is it? 69077. So it's not that one. This one. So it's in this, which is a mixture of Ichimoku Cloud and Bollinger Bands. This was built on Strategy Quant. I don't know where the stop and the target is. Oh, it doesn't have one. Okay, so it must be more dynamic. A lot of my strategies have like rule-based exits as well as stops and targets. So there'll be time-based exits or trailing stops and all that sort of stuff as well. But that's kind of my testing ground. I attach a magic number to everything. So that all of my strategies, again, if I bring this across, let's close down my VPS. If I bring my Notion across, these are all the systems that I'm testing on LVFZ now. You can see they've all got magic numbers and they're all different. The reason I do that is so that when I extract the information from the trading account, I can then break it down by magic number. So I can do another back test. So for example, let's say I run these systems for 3 months. So Jan, Feb, March. At the end of March, I can extract the information live. So I can extract the broker statements, split it by magic number. So I can go, okay, well, this system for ADX and MACD, it made, 0.1% return in that quarter. And then if I run the back test, and the back test also shows it runs 0.1%, I know that the live to back testing data is fairly accurate, right? It's performing as it should. If the risk metrics are the same and it's not this is where you're doing the true overfitted test, right? Because you're seeing if it can perform live. And if it can, I'll then move it over to XAQP. The more strategies I get at XAQP, the more I lower the risk on each individual system. And then I'll recalibrate the portfolio just so that I understand what my drawdowns look like, what my stagnation periods look like, how much return we're looking on average per year, what's the risk metrics of the portfolio as a whole. And that's kind of my process from sort of start to finish, I guess. I still prefer, and this is just me being honest, I still prefer building my strategies manually. It's just, honestly, the missus has put down a rug behind me, and my chair gets stuck in it at least 40 times a day. I prefer building strategies manually with FX Streamer. I feel like you build higher quality systems. However, for time invested to value output, I think SQX or Strategy Quant X is far superior. For example, if I was to build all of these systems through FX Streamer or a block builder, I'd have been here for weeks probably. Whereas with SQX, I can set it to run in the background. I'm putting very little time in other than setting the parameters and setting the tests to run. And so I will probably focus 90% on SQX moving forward, but I will still build systems in the background because it's fun to do. You can validate ideas. And what I like to do as well is if I see somebody shouting about a specific strategy on Twitter or something, I'll go and build it in FX Streamer. So I know if they're full of SHOT or not. Got quite a few questions. Getting ahead with Dr. Ojo said, I wish you could mentor me on how to build strategies. I feel jealous for your friend that helps set things up. So this is I feel like I misrepresented how it started for me. I had one call with this guy. So this guy is a close friend of mine. 2 seconds. I didn't realize she'd sneaked off. So this guy, IME, he's a good friend of mine. His name's Blaine. I did an interview with him. It's on the Darwinex YouTube channel. Just a fantastic guy. Got a lot of love for Blaine. I had one call with Blaine for like an hour where he showed me, he gave me like my first view of FX Streamer, right? It was nothing crazy. He sent me 1 or 2 strategies and was like, here's some examples. They'll need to be built upon, but at least you get the idea of how to build kind of the structure for a system. So I had like an hour, and obviously he's my friend, so I speak to him all the time on WhatsApp and even now. But he never mentored me. He never kind of gave me anything or I don't know. We never had like one-to-ones or anything. We had one call where he just showed me FX Streamer. So the point is, you can go away with the information that I've given you here and be able to figure it out the way I did, because I'm quite a curious and intuitive person. So when somebody shows me something, I'll go away and test things. And this is why I said with Strategy Quant is the best way to learn it is to just do it. There's no YouTube videos that's going to help you figure things out. There's no documentation. You've just got to go out and do it. And you'll find that there's certain settings, there's certain processes that work for you and kind of give you what you want. But you're only going to figure that out if you do it, because you're more likely to recognize the pattern. If I go on YouTube and it tells me to do X, Y, Z, I'm not going to learn from that, because I'm just going to go implement it. Even if it gives me some good strategies, I then need to go back to YouTube to find more settings. Whereas if you're in there testing it yourself and kind of finding your path forward, then you'll remember that, because you remember the thought process that was behind every action. So yeah, I didn't really have anybody help set me up. I would say more than anything, Blaine put me on the right track. He kind of steered my car for me. And as soon as I got off the discretionary trading route and into the multi-strat portfolio route, yeah, I never looked back. Are you documenting your process in any way? To be fair, only on these live sessions. I'm very private. I always have been. I'm really bad at, you know, recording videos, writing stuff. I have a Discord. Like there's over 200 members in my Discord. I've had it for a long, long time, and I'm just not active in there. I don't ever post in there, and it's really poor on my behalf. However, my reason for that is I'm studying for my IMC, so I'm studying for my qualifications to become a licensed investment manager. I'm still learning how to. I'm not the finished article. I'm still learning how to become the best multi-strat trader that I possibly can be. You know, I'm nowhere near the peak. Yes, I've had success. However, I need to sustain that. You know, I'm still at the very beginning of the journey. And, you know, I have a young family. I have a job at Darwinex. I'm doing so much that I just can't commit to creating content about trading because it just doesn't pay the way trading does. So yeah, these live sessions are great because I get to talk about it and I get to do it kind of in real time, if you will, and talk about what I'm doing, which is great because, like I say, I'm not the finished article. So you're hearing from somebody who's actively going through it, not somebody who did it 5-10 years ago, somebody who's going through the process now and you know, building it out. Yeah, CSM, I'm also getting very used to it. I don't think it takes too long, to be honest. You've just got to get stuck in. The more you get stuck in, and this goes with anything in life, the more you just get stuck in, the quicker you're going to figure things out. The more you put things off and you know, kind of go, well, that's scary, so I'll attempt it another day. Like, it's not going to benefit you. You've got to jump in with 2 feet. Daimontas, I'm really sorry if I butchered your name. Said the risk system is extremely in depth and awesome long term, but I'm worried when it comes to sizing up. Does Darwinex also reward holding large positions as you grow? There's no kind of rewarding or punishing certain behaviors as long as it's consistent and you're not taking excessive risk. So the risk engine is, yeah, it's extremely in depth and it is awesome long term if you embrace it for what it is, right? It's probably not going to make you a millionaire overnight. However, what it will do is teach you a lot about your systems, teach you a lot about you as a trader and how much exposure you take to generate any return. I wouldn't be worried about sizing up because sizing up is a natural part of trading. So if you're sizing up on a specific trade, then yeah, your value at risk short term might fluctuate. So you might have some exposure closed on a given position if you're going to, you know, if you get into a massive position that is far bigger or exceeds the threshold of your previous trades, then yes, you might run into some short-term hurdles. But if you're talking about sizing up and trying to scale, Darwinex isn't gonna hinder you in that regard. It does everything from a mathematical perspective as well. So it's not going to look at a specific trade and be like, well, you've longed euro dollar, but it looks a little bit heavy, so it's going to shave off some exposure. It won't do that. It'll look at the exposure that you take, the deleverage that you're using, and it will shave off some exposure based on your deleverage at any given time. But yeah, it's a real roundabout way of kind of answering that. But yeah, holding larger positions is fine as long as it's consistent, as long as it's in tandem with what you do consistently day in, day out. CSM, I really like Algo Wizard 2 if you want to build something specific. Yeah, I haven't really looked at Algo Wizard too much. I think I did I use it once? Is this the one where you have credits? Do you get credits for this, or is that the AI Wizard that you get credits for AI Wizard? So I haven't done that. Yeah, I haven't looked at this too much. I feel like I might have to have a play around with this over Christmas. But this I believe is very similar to FX Dreamer, perhaps. Simple. Let's go. Okay. Let's go stop order. Yeah, we want. This is okay. So click new structure. Yeah, it's like a block builder. So yeah, this is similar to FX Dreamer, which is great because it means I don't have to pay for FX Dreamer if this works. Way better than FX Dreamer. Cool. I'll do some studying on this over the Christmas period and see what I can come up with. Rob said, Sam, I need more info on it. Dr. Ojo, cool. Best way, learning by doing, getting your hands dirty. Exactly that, 100%. So here's a, I would say it's advice, but here's something that I found that works really well for me is, and this is for consistency and robustness. This isn't for performance. So something that I've found works really well on pretty much every strategy on any asset is instead of using fixed value pips or fixed value percentage stops and targets, I use an ATR based stop and then a percentage based TP. So if we go ATR based value stop and then percent value, I don't know how you do it on this. I'm presuming you can only put one fixed value in there. Let me show you on here. Where is it under? Is it building blocks? No, it's not building blocks. Here we go. So stop loss required. I haven't got it enabled there, but I usually have ATR based stop enabled. And then I put the target to 50% to 150%. I don't want to be building strategies that are 5-to-1 risk to reward for two reasons. One, I don't like those systems. I don't like sitting through major drawdowns or losing streaks, even on a singular strategy. I just don't like it. It doesn't fit with what I like. I have systems running at a 0.3, 0.4, 0.5, 0.8, 0.7 risk to reward. Works really well when you combine them all together. So basically 50%, what that means is that the target is going to be 50% of the size of the stop loss, okay, up to 150% of the size, which would be a 1.5 risk to reward or 1.15 risk to reward. So I like it to be anywhere within that kind of range. And what I found is that spits out really solid results that, yes, can sometimes be a little bit overfit, but it's less prone to being overfit as if I used fixed pips for two reasons. One, if I'm testing over a specific time frame where euro dollar is slightly more volatile, then hey, maybe I needed a 20 pip or a 30 pip stop. Whereas through quieter periods where it's a little bit more range bound, maybe I only needed 10 pips. So I'm probably going to end up overfitting the strategies for that specific period of volatility. And that kind of goes outside of the volatility as well, is you're always going to end up overfitting for what worked in that initial sample size. Whereas with ATR-based stop, it is based on the ATR, which is the average true range. So that kind of accounts for volatility. So if the candles are slightly bigger, the ranges are slightly bigger, then of course the ATR is going to be slightly wider. When the ATR is slightly wider, your stop is going to be slightly wider. When you're using profit target ratio or profit target percentage ratio, of course, that is also going to be wider. So you're already accounting for the volatility inherently baked into the assets. So it's less prone to be overfit. That's not me saying it won't get overfit, of course, but it's less prone because when you're trading in 2017 over here, 2001 over here, and 2025 over here, it's like a dynamics, stop and target, right? Because it's using the fixed values at those periods, or sorry, it's using the dynamic values at those periods of the ATR. It's not using a fixed value where you go, well, it's 30 pip stop in 2001, 2017, 2020, 2025. It's taking, okay, what is best to use in this period? Okay, or not even what is best to use in that period. It's based on the ATR, so it's a fixed value in terms of it's using the same value every time. However, it's dynamic because that value might be slightly different each time. It might be 5 pips, 10 pips, 50 pips, who knows? Thank you for answering my question. It's a pleasure, dude. I'm on the futures plan, so I was just wondering, especially since I take multiple trades in one day. You should be okay as long as you're consistent with what you're doing. Consistency is everything. If you're a high risk trader, then you're a high risk trader. If you're consistent with it, fantastic. If you're a low risk trader, great. If you're consistent with it, just don't be trading one contract, then the next day trading 100 contracts, then back to one contract. I mean, even outside of Darwinex, that's a recipe for disaster. Yeah, you'll be fine if you take a couple of trades in a day. Absolutely fine. Dr. O just said, do you find it easier to find an edge trading indices, commodities than Forex? That is a fantastic question because I absolutely do not. Me personally, I find edges way easier in FX. I don't know if it's because of the certain things that I look for, perhaps. I mean, I say that. Let's. How many? I don't even know what the breakdown of my systems are. I do have it here somewhere. Okay, so I have. So I've got 17. This is on XAQP. So I've got 17 strategies on FX pairs. I have strategies on indices, which is, as you can see over here on the left, DAX, S&P, and NASDAQ. And then I have 6 on commodities. So I'm very heavy on the FX front, but I always have been my whole trading career, even as a discretionary trader. I was always way more active in FX. They're very efficient markets, but the way I trade is very simple strategies. So it's not like I need something that's super unique, that would be better on an indices because it's less efficient. Like I'm looking for, super simple things. To be fair, indices has saved me this week, really. History, put it to this week. So what day was the start of this week? Monday. So these are all the trades from this week. You can see I always talk about this system, right? Let's get rid of the blue. I've just realized I haven't taken a loser yet this week, but I am in some losing trades right now. I'm in a couple of mean reversion trades on dollar CAD. I'm hoping this turns around because that'll pretty much wipe out the whole game for this week, but it is what it is. I'll probably close these out because I want to shut down XAQP by the end of this week. So if we track slightly higher and we're somewhere up here but haven't hit the full targets by the end of this week, then yes, I will probably just close them and move on and shut off for the year. However, going back to this, so I always talk about this S&P system. I don't know why. I love it, even though it's not the best. I just absolutely love it. So this is the equity curve. The back test and the live data is virtually identical. I put that down to it's not overfit because it uses a low risk to reward structure, and it's very, very, very simple. So the guys who come to these sessions regularly will understand and know this strategy. Basically looks for, if Friday was bearish on the S&P, if Friday was a down day, then it buys the cash open on a Sunday evening. So basic. So this is over 8 years. There's 153 trades, 58.82% win rate. It is long only, right? Because it's only buying if the Friday was bearish. So there's 0 short trades, 153 long trades, 90 of which were winners. The average loss is 146. The average win is 142. So it's a 1-to-1 risk to reward. But because we've got almost a 60% win rate, it has a positive expectancy over time. Profit factor 1.37. I ignore sharps usually in MetaTrader because they don't calculate it correct. Monte Carlo looks decent too. Max drawdown would have been slightly higher, but the return was basically didn't diminish too much. So with a 95% confidence level, we know that we're still over a 3% return, but the max drawdown could have gone from, what was it in MetaTrader, because Quant Analyzer doesn't do it properly. So 0.98% equity-based drawdown. So pretty much a 1% drawdown at any given time was the worst that the strategy experienced in the final test that I do from 2017 to 2025. That could have increased to 1.62 based on this Monte Carlo test, which effectively just takes all the results and scrambles them around and says, well, if you didn't have that winning streak there and it was actually a win-lose, it'll basically just restructure the wins and losses for the system. What happens here is if there's a massive change in the net profit and a massive change in the max drawdown, then you know that it was very overfit again because it was based on that sequential win-loss streak. If that didn't happen, then it wouldn't be as solid of a strategy. All that to say, that triggered this week because Friday was bearish on the S&P. If I bring the strategy up, so you can see cash open is here. Clip that Sunday night, almost half a lot on the SP 500, pretty much just ran straight to target. My target was actually slightly higher here, and I closed it out. I can't remember where I closed it out. Yeah, I can't remember where I closed it out, but I literally closed it out like two ticks from target. And then I checked back a couple of hours later, and it would have clipped target, but this was kind of what I was expecting. So that's probably why I closed it out. Then went into dollar yen, a couple of winners on dollar yen. I scratched those at break even too. So we had where is it? The inside day, was that here? The 11th? No, 15th. Okay, so here, so it's an inside day breakout on dollar yen. So it went short there, clip target here. Again, negative risk to reward system. It then got short again, was in profit all day. I scratched at break even because that was like an hour before. Yeah, it was an hour or so before it shuts the trades anyway, because these two trades have a time-based close on at like 6 p.m. on the evening. So I shut those at scratch. Then the NASDAQ. This strategy has been chopping me about for the past couple of weeks. So if I turn that off a sec, no, that one. Yeah, so you can see I kept getting chopped about here. So it got long, ignore these ones because that was okay. Got long here, straight to stop. Again, that was a profit. Got long here, straight to stop. Got long here, straight to stop. Got long here, straight to stop. I got chopped about like 4 times within the week, but 3 times on the bounce. I don't know what happened there. Yeah, I don't know what trade that was. And then coming into yesterday, I was short on the break of this low. And then it also took a short, again, the same strategy in the night, and then went straight to target. So it's been a fantastic week thus far anyway. But indices really has saved me this week, because if you take out dollar yen, or sorry, if you take away all the indices, I'd only be up like what, $56 for the week, when in actual fact I'm up almost $300. So it's nice to have a mix. And again, that's such a long-winded response of to your question, is what do I find it easier on? But what I try to stay agnostic to which I prefer, or to what I'm building, as long as I have a nice range. As long as it's diversified already, that's all I really care about. So yeah, let me dollar CAD, euro yen. Okay, yeah, I would really like dollar CAD to move higher this week. Yeah, CSM says it's better to focus on the assets you know best first and go from there. 100%. I couldn't agree more. I mean, would I say I know FX better? Like, probably. I have more experience trading with them. However, what I realized is when I stopped being a discretionary trader and I started going into automation, I realized how little I knew. It was always opinion. And I guess discretion is part of the edge, right? As a discretionary trader, you should always rely on your opinion. And I actually think that is your edge. Your edge is less like what lines you draw on a chart, because if your system stops working, but you have the discretion, you will find a new edge and you will be able to trade it, again and again. So I do think for discretionary traders, discretion is the edge. But what I realized is I actually had no idea about which technical patterns work, which indicators work. And I got caught up in this, right? There's a big notion in this industry, or the retail trader side of the industry, I should say, where if you use certain indicators or you use certain patterns, you're classed as a retail trader, which I get, like we all are anyway, right? And if you're not using some stupid thing like smart money concepts or ICT, then you're an idiot, because you're not trading like the banks. Like, and you can get, your mindset can get poisoned there, and then you can look at something like a Bollinger Band and be like, well, why would I use that? The banks aren't using that. That's not smart money, quote unquote. Idiotic. But anyway, I come into automation or automated trading with kind of preconceptions. I'm not using Bollinger Bands. I'm not using Ichimoku. I'm not using Keltner channels, all of this sort of stuff, because it just doesn't work, right? If it worked, everyone would be using it. But you slowly realize that actually the things that you think are going to work and the things that you don't think are going to work, generally you're wrong on both sides. The things that you think, like I've built strategies in the past where I've gone, there's absolutely no way this system fails. Absolutely no way. And then I put it live and it just gets butchered day in, day out, instantly. Like, and you see it straight away and you're like, but I had such high hopes for that system and it just got ripped apart on day one. Conversely, I built systems where I'm like the S&P 500 system, for example. I built that thinking there's no way there's an edge in this. There's no way that's going to be profitable. And yet, alas, did all my tests, did all my robustness checks on it, and it checks out. And it's like, well, why do you hold these preconceptions when you know, the majority of the time you're wrong. I also, as kind of a side note, I hate the term smart money concepts and all this sort of stuff. Like I hate it with a passion, because if it was true smart money, but you've got a 10 or 20 or 30% strike rate, is it really that smart? Like, surely if you're following the banks or following the algorithms, you're going to have a much higher win rate with a much higher expectancy. And you're not going to be trading a prop firm account. You're going to be trading institutional money, and you're not going to be bothered with Twitter. I have a real beef with that sort of thing, because it's just when you really think about what people say, you really realize how stupid it actually all sounds. Yeah, I think me ranting now is my cue to stop the session, because I'll just keep ranting on and on and on. If anybody ever tells you that a system isn't going to work, just know that they're talking rubbish, and it's likely that they've not done enough work to actually figure it out. Even me saying strategies that I found that don't work, it might just be that I've not built them correctly, right? And you always gotta find your own. How am I trying to say? You've always got to come to your own decisions and to your own results, right? I could do a load of testing, but you need to see it for yourself. You need to test the same things. You need to build the same things. You can't just take my word for certain things. I wondered what my notification was. It was it's just closed the dollar yen positions I was in at scratch, because again, 6 p.m. closes them. Yeah, simple systems are always better than complicated ones. It's so difficult to build like a complex master strategy. It's so difficult, and there's so much code that needs to go into it, so much thought process, time, energy, like to then most likely have something that's extremely overfitted and never going to work or hold up in live conditions. Whereas building, multiple small, simple strategies, it's so much more robust as a process and as a system, if you will, than trying to build one master strategy. But yeah, with that, I'm gonna leave you with that as kind of the final note. Again, I will be back tomorrow at 4 p.m. UK time, so an hour earlier than today's session. I'm putting Thursday session on hold because I'm not sure whether my son's with me on the afternoon. Hopefully he's not. Hopefully he's at his nan, so I'll be able to stream. And then it will be kind of Christmas shutdown. So that will be the final stream of 2025. So guys, I just want to say thank you all for joining, and thank you for the guys who've been putting comments in the session. These sessions are nothing without you. Honestly, I'd just be some weirdo sat here talking to my camera for an hour otherwise. So massive thank you for everybody who's joined, listened to me rant on and on and on about algo trading. And yeah, I hope you all have a fantastic rest of your morning, afternoon, or evening, wherever you are watching this from in the world. And I will see you in the next session. Peace out, guys.